Good afternoon, ladies and gentlemen. Today we're going to discuss something completely new to this channel, something we haven't talked about before, and that is block trades that happen on the ASX. Now, what you can see here is a bunch of trades executed after the market's closed, and you can see these condition codes, L5XT, L3XT, SXXT, a variety of different condition codes, and you may have noticed this both in pre-market, post-market, and even actually during market open. What we're going to discuss is what these are, why they exist, and how they impact your trading intraday. Here's a really clear, quite significant example that happened in the last couple of days on the stocks TLX. So today's the 28th of February 2025, and this is the execution that was done this morning at 9:30 before market open of 5 million shares at $28.90. And you can see there's an S2XT trade that went through all the condition code for that. So the last closing price on TLX was about $30.40, and it opened up at $29, which is just a little bit above that condition code price, or that block trade that we just saw. So that is a pretty significant drop of 4.5% that occurred. Now, a big part of that is not only because it was on a downswing, but because of that large block trade. I believe the CEO was having some sort of divorce settlement or something, so we saw a lot of shares go through yesterday in the morning as well, and then even more go through today. So the block trade yesterday in the morning, if I recall correctly, was $29.50, and the stock didn't quite get to that price. It sort of dropped at around $30 and bounced, and then even more selling happened this morning, and it just kept tanking. So a very big drop from these block trades, of causing a drop of up to 11% intraday. So why do these block trades exist? Well, effectively what these are, these condition codes, so we're going to start with XT. XT is quite simply a cross trade. It just means that there was an arrangement outside of the central order book, and the order book is here, where you can see the prices between the buyers and the sellers. So this trade execution happened outside of this lit market that you can see here. Because as you can see, 4.9 million shares, if this person was to sell all 4.9 million shares on the market, we can go all the way down to $13, and you can see there's only 200,000 shares in the order book. In fact, they would only sell 200,000 out of their 5 million shares and absolutely devastate the stock. So, because the person who owns these shares obviously doesn't want to do that, they arrange for a way to find a buyer or an institution that wants to take their shares. Now, what can happen is the cross trade can happen at a premium, or it can happen at a bit of a deficit. In this case, it happened at a much lower price. So we occasionally see block trades happen on sort of the mid caps where a stock is rising, and someone might pay, let's say for a $3 stock, someone might pay $3.15 for a much larger position because it's an in-demand stock, it's been rising, and someone just really wants a large amount of shares, but they also don't want to move the share price significantly in order to buy all those shares. So what happens is these institutions find people that are selling the shares, and they will buy in large portions and then report to the ASX, which is where the S2 and S3 comes in. ASX has a reporting system through the S3 trading platform or the S2 trading platform. I don't really know the difference between the S2 and S3. I know one is off market and one is on market. I'm not too aware of the significance there. But we also have L3 and L5. So L5 is executed in a dark market or a dark pool. So the order is sort of hidden from participants. We don't often see that happen, at least not during market open. At least I don't recall the last time I've seen an L5 trade. This might be one of the first times I've seen it in a long time, these L5 trades. Effectively, I would look at this as a retail trader and go, all this is effectively the exact same thing in my eyes. The way they work behind the scenes are different. because this is how institutions trade large amount of shares. But as a market participant like you and me, it effectively doesn't do anything different. If you see an SX XT or an L3 XT or an S2 XT, it makes absolutely no difference to the way you and I trade. We just see a large block of money at a certain price, and we just take that information and we go, right, there is a large institution that wants to buy at a premium, and what you generally tend to see is a stock moves up if the block price is higher than the current trading price. And in this case, TLX was trading substantially lower, but mind you, for a very large amount of shares. And the stock drifted down. So for $28.90 from $30, that was a discount of about 5%. Because in order to move $142 million worth of shares, you're generally going to get a bit of a discount. The buyer's just going to get a discount to buy that many shares. And I believe that's what happened. But again, it's not nice to see someone offloading 142 million shares at a discount. It's just not a nice thing to see. So the market reacts to the fact that these have been sold. Doesn't matter why it's been sold, because the market is just reacting to the price action in the short term. This may not necessarily affect the stock in 2-3 months time, or 12 months time down the track. It's just a short-term reaction to a large price movement. So that's effectively what cross trades are. If you see these during intraday trading, particularly for a mid-cap stock, and it trades at a premium, then there's a pretty good chance the stock will drift in that direction intraday. So you can find that in the order book throughout the day as a tool to help you decide which direction to take a stock. If you're trading a $3 stock and someone buys a large amount of shares for $3.20, that stock is very likely going to drift towards that $3.20 mark. Is it going to get to $3.20? Not necessarily, but it could go to $3.11, $3.12 and sort of move in that direction. Now, that's not always 100% of the case, right? That doesn't always happen that way, but it's worth paying attention if you see a large cross trade that a stock will quite likely move towards that direction. So just based on historical data, that's what tends to happen, but of course not always, not financial advice, yada yada yada. Now, one thing to keep in mind is that these executions are pre-market. If we go back down, these kinds of executions, although not this big, can happen on Friday mornings, and that's because on Thursday our stock options tend to expire. So if we go to derivatives and we got options here, they always tend to expire on a Thursday. So you got options here, so it always expires on a Thursday. And then what you tend to see in the order book is these kinds of trades happening throughout the morning. So do keep that in mind, is that these block trades can also be quite simply options getting converted. So that's one thing to take note of. And if it happens on a Friday pre-market, it's almost certainly for these larger stocks. We're talking about the ASX top 20, top 30, these stocks that all have options. You tend to see these pre-market SX, XT type of trades in the morning. So don't read anything too much into that, because what you have is very large orders to both to the premium and at a deficit. So, for example, on TLX here, we'll see trades, for example, at $30.50. You might see some at $27. All that is someone executing or converting shares, whether it's puts or calls. So that's why you see either side executing a trade. So someone's getting the right to sell at a higher price or the right to buy at a lower price. So that's what that is on Friday morning. So keep that in mind. Those are options trades. Those tend to not mean anything. But in this case for TLX, it was not an options trade. It was quite a significant block trade, and that is very likely the CEO or one of the board members, whoever's having that divorce issue for TLX. Very likely that's the cause of that trade. So I hope that helps you in your future trading. Again, if you want to learn how to day trade, check out my course in the comments below, and I'll catch you guys in the next video. Cheers.